Morning, Monday, February the 7th. We had non-farm payroll out on Friday. 467,000, I think it was, the number of jobs created in the US compared to 150,000. That was expected. We'll have a look at the stock markets in a minute because I think probably, well, of course, the dollar was affected, stronger dollar. I don't really understand why the dollar collapsed on Monday, Tuesday. Made no sense to me at all. And then, of course, it bounced back again into the end of the week, especially on that non-farm payroll number. So the moves are a little bit crazy and I think a little bit unpredictable. I don't really understand why stock markets absolutely roared back on Monday, Tuesday last week, but it certainly gave us an opportunity to sell at some decent resistance levels, especially in the S&P. Okay, that's all we can do, react to the markets and try and make some money. So WTI crude, we have a very strong, whoops, overdone that. We've got a very strong resistance level from this 3. It's actually, this goes back to, I think, March of last year. So we're getting on for a 10-month trendline resistance, clearly very overbought WTI crude, but clearly in a very strong bull trend. So you've got to be very brave to sell into a resistance level. But anyway, if you think crude's overdone and you in the low 93 area, certainly we have strong resistance. I've got a feeling we'll probably come back and retest it. We haven't got any negative candle on the daily chart, nothing particularly negative on the short-term chart either. So I wouldn't be in a rush to sell. I would certainly wait until we retest that sort of low $93 area if that's your interest. But I'm just pointing that out to you right now. We've had a little pullback, but I'd want to see a negative candle really on there to confirm that we're probably going lower. Gold, complete waste of time. I've no idea what's going on. This is just one massive sideways trend. I would wait until we hit the parameters of the trend lines, and we're just nowhere near that now. Gold is one of my favorite markets, but as far as I'm concerned, I'm giving up on it. There's nothing in there. Sticking with the currencies, I'm really going to just grumble this morning because these currency markets are a joke. Dollar CAD, what are you going to do with that? That's just trading sideways. We're sort of up one day, down the next day, or we go down for a couple of days, up for a couple of days. That, for me, is not a tradable market, particularly, and it's really the case with a lot of things. The euro rocketed last week as we look at potential interest rates now suddenly on the cards for later in the year. But again, euro yen. I mean, what can you make of that? It's just sideways. There was no way of predicting that massive up move. So I am really struggling with the stock markets. New Zealand dollar and Aussie dollar are another favourites of mine. Unfortunately, they do seem to be working. I stuck with the seller bounce in the bear trend. I have no idea why they were so strong at the beginning of last week, but I stuck with my trend following strategy, and at least selling into resistance worked on those two. Now this is interesting. New Zealand dollar yen. One of my YouTube followers asked me to have a look at this. Asked me if this is a head and shoulders pattern, and I think it is. I think it is a relevant head and shoulders pattern. In fact, I could almost argue that there's two there. I could probably put two necklines on there, but certainly worthy of mention. There you go. I could argue that this is a left shoulder, this is the head, this is the right shoulder, or I could certainly argue that this is the left shoulder, this is the head, and this is the right shoulder. Either way, that trend line has definitely been broken, and we'll see if this trend line gets broken here, which is down around, where is that now? I need my crosshairs. 75. 60, 75, 55. Well, of course, we did try to break that and then we recovered. So we've got resistance around 75, 76, 60, 76, 70. That does look like a head and shoulders pattern, so well spotted. I think that was Khalid that spotted that. Anyway, we'll see if that does develop. We've got negative moving average crosses potentially coming on here. Does look kind of negative. And one thing, the yen does tend to benefit in times of turmoil, and if the stock markets are going to start to turn down, which I've got a feeling that they are, then maybe the yen is also setting itself up for a big move. Now, this is the S&P. Let me just take the trend lines off there. It's clearly developing a bear trend. Lower peak. That was where I expected the market to peak on the bounce, and it happened perfectly. So we're just starting to develop this negative trend. Now, there isn't a head and shoulders pattern here yet. Could argue that one could be created. I guess I could take this low here and this low here and argue that there's a shoulder, a head and a shoulder forming. Of course, we already had that head and shoulders pattern here. And this is common. If you've been following me for a long time, you'll know that I see head and shoulders patterns within head and shoulders patterns. So head and shoulders certainly formed here. We traded that one and we did really well out of it. It hit my target. It was absolutely perfect. Hundreds of pips, hundreds of points that were bagged on that one. Maybe we'll be able to do that again with a short position from here. You can see that my support level around 44.50, 44.40 works perfectly as well. So the S&P, the levels really are working. If you're scalping it, I'm sure you're doing quite well just trading my levels. But I am looking at the bigger picture and wondering if we have got this big head and shoulders pattern and we are setting up for a big fall later in the year. Could happen quite quickly. We could be looking at that by the end of February. NASDAQ is already developing quite a bear trend. Didn't even manage to get up to the 61.8% fib. So I'm feeling still quite negative on the NASDAQ. The US 30, the Dow Jones, is actually less negative than anything else. It looks much more of a sort of sideways pattern. Not really seeing a head and shoulders, I don't think, in that. So I'm not paying too much attention to it. Obviously, it will get dragged down if the other markets start to tumble. Germany 40. This really does look dodgy. Definitely I could argue about a head and shoulders pattern. Shoulder, the head is actually a double top, and that's pretty negative in itself. This could be building the right shoulder. We start breaking below 14,800. This market could be in very, very serious trouble. The EuroStoxx as well, I'm not going to show you that, but the EuroStoxx chart looks really negative. Not seen patterns like this for quite a long time. I've been doing this a hell of a long time, 35 years. Now, I actually predicted the crash of 2008 very simply because there was a massive head and shoulders pattern. Go back on your chart, have a look at it. It was obvious. I wasn't the only person to spot it. Anyone with any technical analysis knowledge and a bit of time to study it would see these patterns. So I got a lot of recognition. It really boosted my business when I predicted that crash. But, again, it was just pure technical analysis. Right, I think that's it for the day. Inflation out on Thursday. I don't imagine there's going to be too much going on in the financial markets until Thursday when we're looking at potential 7.3% number for US inflation. But the markets, I'm pretty sure the stock markets will stay volatile. So I'm pretty sure that's where my focus is for my trading. I think that there are opportunities there with the volatility, and I'm a bit disillusioned with the currency markets now. They're just not doing anything spectacular. It's a scalper's market only for me in the Forex markets. Hope that's helpful. As always, throw questions at me. I always like to hear from you. Otherwise, we'll chat again tomorrow morning.